my God. Oh no. Oh no. Oh God.
Okay. We're better. I promise. I'm fine. Good morning, everybody. Welcome to the Chaos. Oh my God. Holy shit, that was hilarious. I hope you guys found it as funny as I did just now. Welcome down the Chaos. My name is Brad. The stock market's crazy and chaotic, and so is the studio this morning. Looking at the markets, and it is pretty much boring so far this morning. The S&P's down 0.2%. The Dow's down 0.1%. Nasdaq's down 0.18%. Nothing too crazy there. Crude oil is down a whole 4 cents. It is going to be a riveting day in the stock markets unless something crazy happens. We're going to talk about all kinds of stuff still this morning. What's going on in the markets? I'll be happy to answer any questions. This is just a slow period right now, and it's going to be maybe a little bit tough sledding here for the channel a little bit. It's already a mess. This show is terrible. Looking at Bitcoin right now, it's down 763 points. That's a big mover. We're going to talk about that a little bit as well this morning and what's going on with Binance in the U.S. Yeah, it's kind of a mess. So we're going to talk about that. We're also going to be talking about Twitter. There's some news that Elon had put out, and which kind of prompted the poll this morning, which I'll get to in just a moment. Before I get into anything else, though, let me welcome my starting five: Patson Makava, Biker Brian, GMC Boom, Lord Fenrir, and Allen 316. You guys are my starting five. If you missed the starting five, it could be because you're not subscribed or hitting that notification bell and getting here early. So make sure you do that, and you might just get shouted out in the next stream. But yeah, guys, I put in the poll here this morning. Is Elon Musk destroying Twitter? And this is based off of various things. One of them, which he was talking about the blue check mark and what that actually means and what's going to be in store for Twitter in the future. That's going to be coming up in just a second. But before I get into anything else, let me pay the bills here and talk to you a little bit about credit card debt. If you guys are struggling with credit card debt, listen, we're seeing credit card debt at all-time highs. As the Fed continues to raise rates, that's going to continue to also be a bigger problem if you have high credit card debt. So make sure you guys go check out my friends over at AAA Debt Solutions. If you're struggling to keep up with your credit card payments, AAA Debt Solutions is here to help. The debt consolidation services make it easy to manage your debts with one simple monthly payment. Their teams of passionate professionals understand the challenges that come with managing finances in today's world, and they're committed to finding innovative solutions that work for you. With their help, you can achieve financial freedom and peace of mind. They offer personalized debt consolidation plans that are tailored to your unique needs, so you can be sure you're getting the best possible solution for your situation. Plus, the team is always there to provide top-notch customer service and support. Don't let debt hold you back any longer. Take control of your finances with AAA Debt Solutions. Contact them today to learn more about their debt consolidation services and how they can help you achieve your financial goals as well. Support the channel by clicking and down in the description below. The link is down there. If you guys are struggling with some credit card debt, as many people are right now, and it's probably only going to get worse, go check out AAA Debt Solutions. That link is in the description. Thanks, guys, for supporting the channel. If you guys go check that out as well. I see a lot of people chiming in on my voice changing mishaps. Yeah. The comments aren't disappointing. Thomas to Action, good afternoon. Yes, good afternoon for those of you who are watching from across the pond. And let me know where you guys are watching from this morning. I don't think I've done a roll call here in the morning, but let me know where you guys are watching from. King Hargrave sounds like I got hit with a tranquilizer. Baba splitting in the 6. We can talk about that as well. Yes, Meta got upgraded to tech has just continued to been on fire, but we will talk about a lot of that as well. Darren Anderson says, I found a solution to credit card debt. It's called divorce. Stop the bleeding. I thought you were married, Darren. Hope your wife's not watching. GMC Boom's watching from Michigan. Another one from London. I have so many people from across the pond. It's crazy. It's crazy. I have so many people from across the pond that watches me. I love it. It's great. Now I feel like I need to go to London. At some point in the very near future, when this channel starts making money again, and I start making money again, I'm going to London. That's going to happen. Spring break is lit in Miami Beach. I am sure it is, King Hargrave. I am sure it is. Virginia here, as you may remember, Jason Batts. Yes, absolutely. Danny Alvarado says, I'm in the Rivian warehouse in Silicon Valley. No shit. That's cool. Bro, tag me in on Twitter. Speaking of Twitter, tag me on Twitter. Send me some pics. Would love to see that. This is your fourth marriage. Darren Anderson says, I am, and she's a great woman, but this is my fourth marriage, so I'm speaking from past experience. Oh, my God. I love you guys so much. I love this show. I love you guys. You're the best. Okay. I hope you guys have gotten some good laughs here already. I mean, we are 8 minutes into the show, and it's already been hilarious. Okay, so let's check out the markets right now. We'll look at the SPY and pre-market, see how that's rolling along. And guys, listen, it's been kind of boring. You know, just a little bit up and down. This is your 5-minute chart on the SPY this morning. We can take a look at the Qs, and they're not doing all that hot either. They're just kind of chilling, not really doing much. That's down around 0.2%. Nothing too crazy there either. I just don't think that there's a whole lot to kind of get excited about with the markets this morning. But we're going to talk about a couple of other things news-wise that I think is worth mentioning. And don't forget, we do have weird news, and there's no shortage of weird news out there. I used to struggle to find it, and now that I've figured out where to find the weird news, it is like just pouring in. My jaw drops every time I go to look up the weird news. And sometimes lately I've been struggling to find ones that I think are even weirder than the other one. I might have to do like I said yesterday. I might just need a whole channel dedicated to weird news. I might have to do it. Let me know in the comments if I should do a weird news channel. But anyways, here's your Qs. The tech sector is very interesting. I have two different articles this morning. One of them was from Yahoo Finance, talking about how the bank crisis brings an old favorite back for traders and as a safe haven, meaning tech stocks, which is something that I've been talking about for the last couple of months now, that tech is the play. And so far, that's been working out. But we take a look at Meta right now. That got upgraded. No movement on that just yet. It's down 0.7%. But over the last 3 months, Meta's up 65%. And then you have Barron's that comes out with an article that says tech stocks are expensive now and they might be risky. So it is interesting to get, you have Yahoo Finance talking about how tech could be a safe haven, and then Barron's coming out talking about how tech can be risky. This is why you get your information from all different areas, guys, and not just one. Don't just go over there and watch Meet Kevin and take his word for it. Go watch everybody, right? By the way, I saw that guy's like quitting for the 15th time. We'll see him in a couple weeks. So the question is tech still very much a place to park your money? We talked about this a little bit yesterday. I think it is. I think that tech's still going to do well. Microsoft's up 15% this year. Apple's up more than 20%. Meta Platforms is up 65% this year. I think that there is still a lot more room for this to run. We can take a look at the XLK. That is one of the bigger tech sectors. You could look at the XLC, but the XLC also has Disney and a bunch of other stuff. XLC also has Meta Platforms. But we take a look at the XLK on the weekly chart. Whoops. And you can see that there's still quite a bit of room to run. And this trend right here, these higher lows on the weekly chart look sexy AF. The only thing that I'm worried about is this 150 mark on the XLK. So this is going to be something that I think will be interesting to watch. I do think, though, that there is a lot more room for this to run. And I think that we're going to see this potentially break over that 150. If it does, then we can see the XLK really continue to move to the upside. I understand the risk that's involved with the XLK because of the sharp move that it's had since the beginning of the year. And that's kind of really what the Barron's article was kind of referring to. But, you know, it had such a down year last year, and earnings have been pretty decent for tech. AI is continuing to just be the front-facing catalyst for a lot of these tech stocks, and I think that there is still a lot to like here, especially if the Fed continues to soften up. And if they do, then that bodes well for ETFs or the tech sector in general. If you're not familiar with what the XLK has in it, ACN is going to be one of your stocks in there, but the top ones are Apple, Broadcom, Cisco, Microsoft, NVIDIA, Salesforce, Texas Instruments. Visa is in there for some reason, but nevertheless, those major tech stocks are in there. You could look at the XLC too if you wanted to. XLC is a ETF for the communications sector. You got companies such as I'd mentioned, Meta Platforms, aka Facebook. Disney is in there as well. And let me see what the other holdings are off the top of my head. Google, AT&T's in here too. But Netflix, T-Mobile, Disney, Verizon, those are all the ones that are in the XLC, make up the XLC. You can see that there's a lot of room for this one to move as well. And I think that also kind of paints the picture for you that, yes, it's had a stellar start to the year, but there's still a lot more room for this to roll if it wants to. So not saying that it has to or that it's going to for sure, but for those of you who think that perhaps tech is done, I would encourage you to just take a closer look and kind of take that 30,000-foot view, because it may not be. It may not be. Lord Fenner says, don't take advice from any influencer who thinks the iPhone is the best phone. 100%. Because those people are followers, not leaders. Thomas Acton says tech is booming because of AI. Yeah, it sure is. You know, I watched a video on AI. I watched a video on I wish I could find it. Somebody can find it for me, I guess. We'll talk about it if you can find it. But I watched a musician take Day and Night by Kid Cudi, took the words, and then took out Kid Cudi's voice, injected Kanye's voice, and then Kanye is singing Day and Night, and it was absolutely crazy. Not only that, he took it a step further, made his own lyrics using ChatGPT, found a beat on the internet, and then put Kanye's voice in that. That was and it sounded damn close to actual Kanye. And right now AI sucks compared to what it might look like in 2 years, let alone 10, right? It's exciting and scary AF. Like, AI could ruin a lot of things, and it could make things a lot of things better. It's going to be, and it's moving so fast that I don't even know how regulators, lawmakers, what have you, can take this on. This is going to be something that is I don't know. It's the next revolutionary step in technology, and I feel like that we are in kind of like the very early stages of what it must have been like during like the revolutionary or the industrial revolution, right? The Gilded Age, right? That's what it feels like right now as we talk about AI and how fast it's actually growing and how much of an impact it's going to have on our lives. I don't think that any of us really fully understand or grasp just how crazy and impactful it's going to be. But I think even more of us don't realize how much it's already impacting us and how fast it's actually moving. It's moving so fast that by the time you realize it's here fully, you're just going to be mind blown. You really are. I'm not going to repeat that, Lord Fenrir, but that is funny as shit. That is funny as shit. That is hilarious. Oh my God. All right. Let's go. Let's go ahead and get into, speaking of AI, let's talk about Elon a little bit. And this doesn't necessarily have a whole lot to do with the stock market, but listen, it's a slow news day, so just bear with me. I think it was worth talking about. That's why I put in the poll here. So far, 40 of you have voted that Elon Musk is either destroying Twitter, not destroying Twitter, has to get worse before it gets better, and 8% of you say that you've never used it. But 40% say that Elon's actually not destroying Twitter, and a decent amount of you have mentioned that or voted that it has to get worse before it gets better. And that's actually the camp that I'm in. I won't say that Twitter is better, but I also don't know if I would say that Elon is destroying Twitter. I think that it's just one of these things where it was so bad when he got in there that it has to get worse before it gets better. And people, for the most part, hate change, right? Generally speaking, people hate change. So any changes that have been made to Twitter up to this point, people are just hating on. And mainstream media is also like poo-pooing all over Elon Musk. It's crazy to me that mainstream media is now painting this picture that Elon is just this right-wing lunatic when his entire business, his entire wealth has been built on providing us with a greener planet, which is something that a leftist would be in support of, right? Anyways, I think Elon is very much a person that's in the middle, that just says, that thinks what he wants, and it doesn't have to have any sort of allegiance to one side or the other. And we've seen Elon talk shit about both sides of the aisle. And that's how it should be, in my opinion. So the news is, let's take a look at this. He tweeted out last night, starting April 15th, only verified accounts will be eligible to be in For You recommendations. So if you have a blue check mark, they will be eligible to be in the For You recommendations. This is the only realistic way to address advanced AI bot swarms taking over. It is otherwise a hopeless losing battle. Voting in polls will require verification for same reason. And then this is the part that kind of confused me a little bit. Would love to get your guys' feedback on this and your thoughts on this. But if you look down, he kind of replied to his own tweet, said that said, it's okay to have verified bot accounts if they follow the terms of service and don't impersonate a human. And I'm wondering if that's more along the lines of like if you're a celebrity or if you're a company or a business and you have like an automated software that posts for you, that would be acceptable. But these swarm bots that he's talking about will not be, right? So lots of comments on this already. Whoever Luke Zaleski is, I don't know who this person is, but talked a bunch of shit. Elon's only response was that $7. This guy Ben says, don't get behind this decision. You need to invest money into talent and AI tech to tech bots and platform. This isn't the way to go. It could tarnish the platform. Elon says, my prediction is that this will be the only platform that you can trust. And I've been a critic of some of Elon's decisions before, so I I wouldn't say that I'm a fanboy or anything like that. So I feel like I have a pretty good, clear understanding of what's happening here and Elon's explanation about why he's forcing people to, well, not really forcing, but if you want to be seen as a real human being, you got to pay for it. This does a couple of things. One of them is that it does actually take care of the swarm bots. Now, I actually got in a couple of discussions with some people on Twitter over this last night as well, because some people, I guess, weren't quite getting it. Certain people on Twitter are talking about how, well, can't these bots just pay the $7? $7 isn't a whole lot. Yeah, but if you have software that has 1,000 bots, you're really going to pay 70 grand a month to have your bots swarming around, scamming everybody, scamming people? No. And here's the thing. Most of those scammers you can pick out. They stick out like a sore thumb. So the only people that are falling for that are the idiots or the extremely gullible or super naive. And so I would imagine that these swarm bots or what have you, their hit or miss ratio is probably pretty low. And it doesn't matter to them because right now it's not costing them anything other than time. But when it starts costing them 70 grand a month, that's when you're going to start to really see those bots fall off. Or they stay on the platform and they're going to be even easier to spot. So that's, or they're not going to show up as easily because the verified accounts are going to show up in the For You feed. So that's kind of like the explanation as to why it makes sense for this paid service, what have you. And honestly, really, like, it's not that big of a deal. Like, if you don't want to pay for it, then don't pay for it. But this does something else too. Twitter has struggled, as we all know, for the last 10 years to make any kind of money. And Elon's talked about a couple of things about bringing money into Twitter. Of course, we've heard him talk about Doge. I don't know if that's actually going to be a thing. We'll see. But advertising, actually paying creators on the platform, similar to what YouTube does, or even Instagram to a certain extent, and TikTok. So that, I'm sure, is probably already in the works. But this $7 to $11 a month, whatever it is going to make Twitter money. And I talked about this with Facebook too. Recently, Facebook is testing this out in Australia. So this isn't just a Twitter thing. There's been so many people coming after Elon and bitching. And the crazy part is the people that are speaking the loudest about this are the celebrities. William Shatner, 91 years old, comes out on Twitter, starts bitching and moaning to Elon, and then Elon, of course, responded that it's going to be $11 or whatever it is, which was hilarious. And it's like, you're William Shatner, for crying out loud. Like, get over yourself. You don't want to use Twitter? Get the hell out. You'll be back, and that's fine. But anyways, Facebook's already testing this out as well. And if Facebook gets on board with this, they're going to make a shit ton of money. I talked about this in a video about 3 weeks ago when that news came out. And that's going to be a huge deal. I think this is just how things are going to progress. People aren't going to like it. But listen, you've been using this service for free for decades, almost decades. Facebook has been 20 years almost. I think it has been around for 20 years. It's damn close, if not. But listen, I mean, it is what it is. This is how Elon's figured it out. I think that we should trust him for the simple fact that he's got quite a record of success. And I think giving him the benefit of the doubt makes all the sense in the world to me. Thomas Action says Stanford just announced their own AI model, and they built it for under $600, and they just released a paper on it. By next year, we all can have these models on our phones. Yeah, that's insane. King Hargrave, I'm assuming that you kind of agreeing with my sentiment here. Lord Fender says, why do you have to be aligned to a party? Do your own thing. Couldn't agree more. Danny Alvarado, just out of curiosity, is YouTube your full-time gig or you have extra income? YouTube used to just be my full-time gig. I have other sources of income that I've been creating. The Patreon, of course, and we had other sources of income that not related to this, but trading used to be my full-time gig. And then I started to dedicate a lot more time to this. And so that trading ended up becoming my part-time gig. And then, as you know, Danny, the whole thing with Christian and me moving down here, trading stopped. And so then I ended up having to spend a large amount of my money just kind of like staying afloat and then making up for lost time and the move and all that stuff. So financially, it's been, just to be completely candid with you, it hasn't been great. So I've been trying to figure out other ways to bring in income. I'm trying to get trading back on, trying to get back into the full-time trading gig just because I know that I know how to do that. But raising capital to be able to trade again is, of course, going to be needed. And so that's what I'm doing. That's what I'm trying to do. But yeah. So YouTube is still technically my full-time gig, but it hasn't been quite paying the bills like it used to. So I'm just trying to find other avenues to create income so that I can get back into the trading game and we can do that and still do YouTube. Because this is actually my favorite thing. I love trading. I love finance. I love talking about finance. Being on YouTube and hanging out with you guys all the time, every day, that's what I love to do. Hands down. When I ask you guys where you're tuning in from, that's because I love being able to connect with people from all over the world. It's the best job in the world. It is. I could sit here and trade, and that's fine, but it's lonely trading by yourself. It just is. But we'll get it back. We'll get it back. It needs, the only way that it can is support from you guys. Checking out the links in the description. Checking out Patreon, supporting me in that way, or you can just join the channel, what have you, which I know that you are, Danny, so I appreciate that. But anybody else, and be a friend, tell a friend about the channel. Share it out to all your homies. Sanjeev, what happened to Fat Man Zoom? He got brain cancer. I guess it's been a while since you've been here, Sanjeev, but he's still with us for now. But it could be any day now that he will no longer be with us. That's the timeline. So it is about a minute before the market opens up here. Let's go ahead and take a look at the chart. Let's pull up the SPY as we are officially open. We'll pull up the 5-minute. Which, by the way, if you want to continue to support the channel, as I was just talking about, check out our Patreon. Don Fran from the Don Fran Show, as well as myself, are joining forces over at patreon.com/ownthechaos. Don has been creating his trade alerts for his own account that he's been building up. It's a small account challenge. If you guys want to go check that out, we certainly would appreciate it. It starts at $5. You also get access to exclusive content from yours truly, as well as our Discord. And again, really no risk to you, but it certainly helps support us in a big way. So go check that out over at patreon.com/ownthechaos. The link's in the description. Love to have you guys there. Help support me in that way. All right, so SPY looks like it's trying to sell off here a little bit, but we'll see. It's early. It's down 0.25%. Take a look at the Qs. That's also down 0.25%. So nothing really happening. We'll come back and revisit that. Thanks, Dark Energy. Appreciate that. Appreciate the love. Also keep those votes coming in. I'm curious to see how this ends up. It looks as if most of you think that Elon's not destroying Twitter. I tell you what, that's a large percentage. 22% though, still think that Elon is. It's interesting. Okay, let's get into a little bit of the news revolving around CZ. If you guys haven't checked this out, first of all, let's take a look at Bitcoin right now. Oh, wow. The Qs are selling off pretty bigly. I saw that Lord Fenrir was shorting Meta Platforms. It looks like that trade's actually working out pretty good. It actually had just fallen into this zone. This is one of Don's zones. Again, you get these charts over at patreon.com/owninthechaos. So yeah, you can see that Meta's actually falling into this zone. It's probably going to, I would probably remain short into this unless it pops back up out of this zone. But as long as it's in here, I probably would stay short on that, on Meta Platforms, if you guys are looking to make a day trade out of it. Yep, that stock's now down 1.8%, falling back down below 200 this morning, which honestly is fine. This thing needs a breather. Is NVIDIA down too? I sure hope so. Yeah, NVIDIA's down too, but not by much. It's down 8 cents. Living right in this zone. If it falls out of this zone, probably comes down even further, but we'll see if it stays, if it comes down and retests the bottom of here. But keep an eye on NVIDIA too. That could end up being a decent short on a day trade as well. Keep an eye on that, guys. All right, so as promised, let's check out some of the news revolving around Binance. If you guys haven't checked out or seen what's happening with Binance, the FTC is coming after them. CFTC complaint against Binance. We talked about this briefly yesterday afternoon. It's coming after Binance, and basically, the CFTC has had some strong words. Let's just put it that way. The regulator has claimed, this is according to Yahoo Finance, that the exchange broke U.S. derivatives rules and should have been registered with the agency years ago. The head of CFTC was on CNBC this morning and basically said that this is something that they've been out of compliance for since 2016, I want to say. And so that it was high time to finally lay the hammer down on them. And CZ came in and said that the complaint appears to contain an incomplete recitation of facts, and he disagrees with how many of the issues have been characterized. The CFTC alleges that Binance compliance program has been ineffective, but CZ says his trading platform is the first global non-U.S. exchange to implement a mandatory KYC program, arguing that the company has one of the highest standards in KYC and AML. Elsewhere, CZ said that Binance employs 750 people across its compliance teams, many of whom have a background in law enforcement and regulation. He noted that the exchange has handled over 55,000 requests from authorities and has helped American detectives freeze $160 million so far in 2023. Some of this related to money laundering is what the CFTC is kind of going after, and kind of it being a safe haven. Binance, or really crypto in general, continues to be kind of like a theme. But honestly, the easiest way to launder money is still with cold hard cash. You look at cryptocurrencies in general, most of them have a ledger. You're going to be able to see that, right? Like there's a paper trail, especially like Bitcoin. I love that politicians or people who really don't understand Bitcoin talk about how it's so easy to launder money through Bitcoin. And it's like, no, it's not. Once you figure out that this person owns that and then you can just trace it all the way back, they're screwed. They're screwed. That's why it was so easy. If you guys recall the CoffeeZilla and Logan Paul huge riff, CoffeeZilla was able to discover all that through the wallet, through their crypto wallet. So it wasn't really all that hard. But looking at this, CZ went on to stress that all staff are subject to a rule that means that they cannot sell a coin within 90 days of the most recent purchase, stopping employees from actively trading. This is actually a practice that gets used in major finance firms as well. When I worked for a major financial firm, I could only make 3 trades a month, and every single one of those trades had to be recorded, and actually my account was linked to the firm itself. So anytime I made a trade, they got an alert in real time, which is crazy. So it seems as if CZ is also saying that they do something similar. This is from CZ. It says strict policies are also enforced for anyone who with access to private information, such as intelligence on when coins can be listed, the CEO added. CZ concluded by saying that Binance looks to collaborate with regulators and government agencies and that the business won't shy away from these challenges. So we'll take a look at Bitcoin, and it seems as if the crypto world is kind of responding negatively to this. It's down quite a bit right now, and we'll see where it goes. This is your 5-minute chart on Bitcoin, but it's down around 700 points in kind of a response to this. But this is just more regulation. This is more, and I briefly talked about this last night too, about how this is what, if you are passionate about Bitcoin or cryptocurrencies in general, this is what you wanted, right? You wanted more regulation. It is maybe not the way that most were hoping the government would go after it, or the way that they would go about it. But what were you expecting? You know what I mean? They're going to do it to benefit themselves, to help themselves, and that's going to be that's going to be how it is. But we shall see. That's your latest on the whole Binance situation. Dark Energy says Google's going under $100 today. Let's see. Let's check out Goog. Yeah, pretty huge move down. That's actually down around 2.25%. Very interesting to see that. So it seems as if maybe perhaps the Barron's article was right as far as it being risky. So one of this article in Barron's that talks about why tech stocks could be risky is that fear that more banks will fail and that obtaining credit will be harder is making investors worry about economic growth and keeping a lid on broader stock market gains. And this kind of would trickle over into tech stocks, right? So if you are worried about the banks failing, then tech stocks in general will have less to borrow from. But here's the thing. Alphabet doesn't need to borrow shit. Neither does Microsoft or Apple or Netflix or Meta, right? Meta Platforms has got $40 billion in free cash flow. I feel like a broken record when I say that, but that's just the truth. And so they can be down today, and that's fine. They needed to be. They needed a breather. That's fine today. Tech can take a break. Looks like that Meta short is working out for Lord Fenrir. Anybody else who decided to take that short still falling into this zone. Doesn't look like there's really hardly any buyers showing up, so it looks as if perhaps it's going to just remain a red day for tech in general. But, generally speaking, I think if the Fed remains dovish or starts to get a little bit softer on fiscal policy and we start to see inflation get softer as these months go on, then I still think that tech's going to be the play in the longer term. Really, for the rest of this year, I think that tech and growth stocks are still going to do well. So today's not a great day, but I'm fine with it. I think that tech needed to take a breather, as I mentioned. But generally speaking, for today or for the rest of the year, I think tech's still going to be the play. Love to get your guys' thoughts on that, by the way. It seemed as if most of you were leaning towards tech as well, but let me know what you think. And then we'll get into the weird news. So weird news of the day is an interesting one, guys. It is an interesting one. Let's take a look at this. Look at this right here. What do you think that is? That, my friends, is a woolly mammoth meatball. I got another good one from Sky News. I feel like Sky News is going to be like one of my weird news go-tos at this point because this is the second day in a row I'll grab the weird one from Sky News. If you guys aren't familiar with Sky News, it's a major UK-based media company. They cover a lot of things, sports, what have you. Sky News actually covers Formula One. But this is a woolly mammoth meatball, and I shit you not. The mammoth snack was produced by an Australian company which aims to transition a few billion meat eaters away from eating conventional animal protein to eating cultivated meat instead. This sounds disgusting AF, but let me know if you guys would actually eat this. Let me continue. The mammoth snack, as I'd mentioned, was produced by an Australian company called Val, which is aiming to use cells from unconventional species to create new kinds of meat. Val's project doesn't involve the slaughter of animals and highlights the link between large-scale livestock production and destruction of wildlife to climate crisis. Lots of cows out there farting. The company has already explored the potential of more than 50 species, including alpaca, buffalo, crocodile, kangaroo, peacocks, and different types of fish. The initial idea for the mammoth meatball was from Boss Corsten at the creative agency Wonderman Thompson. Tim Nakasmith, who co-founded Val, told The Guardian that we chose the woolly mammoth because it is a symbol of diversity, loss, and a symbol of climate change. Oh, God. Woolly mammoths are thought to have become extinct due to hunting by humans and warming of the world after the last ice age. The story goes on, but there you have it, ladies and gents. A synthetic woolly mammoth meatball. I don't even want to know the types of side effects that's going to give off. Right? I mean, they don't tell you about any of that. Fake meat. More fake meat, guys. You can't make this shit up. Or maybe you can. Let me know what you guys think about that weird news of the day. That is your weird news of the day. And let's open it up for questions. If you guys have a particular stock or ticker that you want to take a look at, let me know. We can check out the chart. We can look at some of the fundamentals on any particular stock that you guys have your eye on. Just wanted to open it up towards the bottom of the hour here for some questions. As I'd mentioned, it is a slow day for news. Stock market's kind of just doing its own thing, not really moving all that much. So let's open it up for some Q&A. Dark Energy, appreciate the donate. Thanks so much for the $2 donation. You are the man or woman. I'm assuming you're a man. Probably shouldn't have done that. Jason Batts says, make it a steak and I'd eat it. You'd eat a synthetic steak, huh? I don't know, man. I say that, but you know what? I eat all kinds of fast food, or have eaten all kinds of fast food. KFC, Taco Bell, McDonald's, who knows what's in those things. Okay, Dark Energy. Appreciate clarification. 90% of my demographic is men, by the way. That being said, I have one of the largest female presences when it comes to YouTube finance channels. I don't know if it's the hair. I don't know if it's these good looks. Or you just like my personality, my bubbly personality. But I appreciate you ladies tuning in. And you men. Lord Fenrir says mammoths were killed off in a cataclysm around 12,000 years ago. They need to get up to date on their history and sciences. No shit, my man. The whole thing, the whole premise is ridiculous. Danny Alvarado finally got into NVIDIA puts today and paid off. Very nice, my man. Definitely a good day for that. SBNY finally opened back up and dropped to almost nothing. Was it just eliminated? It practically is, yes. So, yeah, I wouldn't touch SBNY. Absolutely for that exact reason, says Jason Batts. Got you, man. I got you. All right, Darren Anderson asks, thoughts on Crocs. Let's go ahead and take a look at Crocs right now. I'll pull that up. This has been a monster stock for quite a bit. You know, talk about volatile, by the way. One of the more volatile moves that we've seen over the last 18 months has been Crocs. And this has been one that I just am blown away by. You can obviously see that Don has zoned this out to a T, which, by the way, again, if you want access to getting these zoned out charts, go to patreon.com/ownthechaos. I love using these charts. Don is the man when it comes to technical analysis, and he will not admit that this is technical analysis, but it is. Don thinks that he just invented this, and it's not technical. I don't know what he wants to call it, but it is technical analysis. I hate to break it to him. Love you, Don. But you can see that he's zoned this out, and it came down to this bottom and bounced out of this zone to perfection. Crocs is something right now, though, that we've come up to this top zone around 135 and has gotten rejected. It hasn't really tried to move back up over that. So it's had a massive move. It's been a great stock up to this point, really since October. It's up 48% over the last 52 weeks. Year to date, it's up around 10%. You know what the crazy part about Crocs is? Despite those moves, it's only trading at 10 times next year's earnings. That's it. It's only trading at 10 times next year's earnings. And you look at other shoe companies like a Nike, for example, that's trading at 40 times next year's earnings, or a Lululemon that's right around there as well. And even an Under Armour that's still cheap, but it's the PE is quite high. But you look at growth on Crocs, they're growing. Their revenue is at 53% year over year. Are you kidding me? A stock that's trading at 10 times next year's earnings that's growing at 53% year over year? Get the hell out of here. Profitability-wise, their profit margins are at 52%. What is Crocs doing down here? So technically speaking, if we're just looking at the chart, it may be a bit volatile still. It may struggle around this area, so just be careful. But fundamentally, this is stupid cheap when you compare it to the rest of the industry, especially when you look at their growth and profitability numbers. It's insane that it's trading at 10 times next year's earnings, period. And tell me why it should be at 10 times next year's earnings if you disagree. I don't get it. I don't understand why it's down here so low. And listen, there's explanations for everything, right? I'm not saying that shouting at the market's going to change anything, but like it's just kind of mind blowing when you look at the industry itself and where it's trading versus where Crocs is trading, and Crocs is still growing at a ridiculous rate. 50% year-over-year growth, 53% year-over-year growth in revenue. Profit margins are over 50%. And just for comparison's sake, okay? Just for comparison's sake, let's just take a look at where Nike's at. And Nike isn't something that I'm telling you is a garbage company, okay? Their gross margin is 43%. Isn't bad, but it ain't 53%. Their growth is at 8%. Now, granted, Nike's a giant company. They're global. Everybody knows Nike, so I'm not expecting Nike to be growing at 53%. They're not the same type of company or when it comes to maturity as Crocs is, but 8%, okay? Forward PE on this is at 36 times. 36, almost 37 times next year's earnings. That's where forward PE is on Nike. And you got a company like Crocs that's growing like that, that's trading at 10? Get out of here. I hope the message is coming through that I like Crocs. Which, by the way, I am wearing today. Got the old camos. And also, The fleece line is where it's at. Fleece line Crocs, comfortable AF. They're so soft. I love Crocs, man. All right, that was a great question. Thoughts on Walgreens after their report on earnings? Yeah, so Walgreens reported this morning. I didn't know if anybody was going to actually ask about Walgreens, but we take a look at WBA. You can see that that is up 3.25%. So Walgreens earnings came in, and they did pretty good, I believe. Is it? Oh, sorry. Let me pull up those numbers here for you real quick. They came in, beat expectations by 5 cents, coming in at $1.16. Revenue came in at $34.9 billion. They beat those expectations by around $1.34 billion. The company is maintaining full-year adjusted earnings per share guidance of $4.45 to $4.65 versus $4.50 that was expected, so on the higher end of that. Strong core business growth is more than an offset by lapping peak COVID-19 demand, pivoting to mid-20s percent adjusted earnings per share growth in the second half of fiscal 2023. The CEO commented that WBA or Walgreens exited a solid second quarter with acceleration into February, adding to their confidence in driving strong growth in the second half of the year. With the closing of VillageMD's acquisition of Summit Health, Walgreens is now one of the largest players in primary care with best-in-class assets across the care continuum. Both Walgreens and Boots are performing well by delivering compelling value to customers, playing a critical role in community health destinations, and successfully navigating a challenging environment. We will continue to make bold actions to create sustainable long-term shareholder value. So that is some of the highlights from your Walgreens earnings this morning. And it's looking good. This is your weekly chart on Walgreens. Obviously, you can see that this nice little green candle is this week. If we go to the 5-minute, well, first of all, let me stick around here. Watch this move up to 36. That's going to be your resistance. If it gets rejected there, it's probably just going to roll over. So just keep an eye on that. But it was a good quarter. Is there an opportunity for Walgreens right now to go long? I mean, it was a decent quarter. It's trading at 7 times. Profitability is at 20% gross margin, but it's not really growing all that well. They're going to have to put a couple of quarters together before I'd start to really get excited about Walgreens. But if you want to take a flyer on it, I don't see that there's anything wrong with that. I think there's better opportunities out there, but hey, Walgreens could make you some money, and there's nothing wrong with that. I would just need to see another quarter or two of actual growth from them. You got it, Alex Ramirez. Appreciate the kind words, my man. And that's going to do it for today's show, guys. I'll see you this afternoon at 3:45 p.m. Eastern Time. I hope that I have something to talk about because it's been brutal here. But I appreciate you guys tuning in. Hit that thumbs up if you wouldn't mind on your way out the door. And don't leave just yet because we do have birthdays coming up. But I will be back at 3:45 p.m. Eastern Time to cover anything that's going on in the markets. And I certainly hope to see you guys there. And let's get to the birthdays. Happy birthday to Lady Gaga, who is 37. Reba McEntire is 67 years old. What's happening? I feel so old. I'm telling you, every time I cover these birthdays, it makes me feel old. I know that they probably feel old, but it makes me feel old too. Julia Stiles is 41. Derek Carr is 31. And let's not forget about Cagney Lynn Carter, who is 36. She was well known for big booty threesomes, blow these toes, fast boob joint, pound the round, and my personal favorite, Adventures of Captain Cock and Super Snatch. Guys, those are your birthdays. And let me just tell you, Cagney Lynn Carter, the list of titles is legendary. I think that's the largest list of titles I've ever seen from an adult film actor. Largest list. It was impressive. But those are your birthdays, guys. Thanks so much for tuning in. I love every single one of you. You guys are the absolute best. Appreciate you tuning in this morning and support me in that way. And I will see you this afternoon. Till then, stay safe. Have a great day.